Damn, I look way more put together than I usually do for these streams. But this evening, folks, this is an end of an era. I mean, I remember when Jack Bogle passed away, the inventor of the ETF, the guy that basically is probably responsible for making more people wealthy in America and probably globally than any man alive. But another legend, obviously, Warren Buffett is looking to retire. And I want to dive into that while we also review the portfolio and talk about the dynamics of the current economy that I've been arguing with immensely with boomers, older people, younger people, and kind of getting a sense of like what the future might look like from here, because it's a weird time to be alive. It's an expensive time to be alive. And as we take a look at futures, things aren't looking too hot, but this is actually not that bad overall. I mean, there's a pretty mixed bag of performance across stocks, considering we do still have some earnings going on, and to be down after that wicked run, I mean, to see futures down 0.5 percentage point, like this could fully recover tomorrow. It's not like we're seeing like a couple percentage points down. The VIX is cooling off a lot. The volatility and the insanity is starting to calm down. Yak attack. Don't worry, everything's good. We should be chilling out a little bit here these days. But we do got some fun earnings tomorrow. And just speaking about valuations and metrics, I don't talk about Palantir that much. And it is an incredible company, but it's one of the most fascinating stories today because it's either just an absolute iconic bubble that everyone, including myself, that keeps saying this is expensive are always wrong because it just perpetually goes up. But the crazy thing is just Palantir is one of these companies that would have to double its earnings like every year for the next 4 or 5 years to like even like justify the value that it currently has. I mean, it makes a lot of companies look cheap and comparable, but I mean, you're pulling forward incredible amounts of value. There's a lot of retail holding tight. So we need to see, I'm not doubting their earnings aren't going to be anything short of incredible, but to justify the value, we'll see if it can still, get it up there and offer some momentum, as it feels like it's becoming more of a momentum stock. Kyle, let's talk about Take Two. I sold. The thesis has changed. Could you pick this up lower possibly in the future? Stick around. We're going to get to that conversation, of course. I don't see a whole lot of green in my account. Yeah, I mean, in totality, I don't think this year I'm in like crazy green by any metric. But overall, like my accounts have recovered nicely. I actually have some charts that I can show you to show you how much I'm down, which we'll get into in a moment as well. But diving a little bit deeper, we don't have NVIDIA's earnings coming out, I think, until the 25th or the latter half of this month. We're also going to get a lot of Canadian earnings coming up here, which I'm super excited for. But let's get into the portfolio itself. We're living in an economy right now where, according to, the man himself, this is Biden's market when it's going down, even though, we're kind of shooting ourselves in the foot here with these tariff wars. And we're going to listen to Warren Buffett discuss just that, which I think is the most iconic thing from this year's annual shareholder meeting, was him talking about, tariffs and kind of what it means to him, which, Buffett's quite a conservative guy. And, he's a legend for a reason, because, for a guy in a world of egos and historic cocaine use, for a guy to be so calm and collective and nice and mannered, his take is always quite humbling. But nonetheless, my portfolio, because of the crazy amounts of money we've been shoveling into the markets, basically bankrupting my savings accounts and my stock market emergency funds. And I am starting to see the benefit of that, as many of my friends are, because we're all a bunch of delusional nutbags that don't really care that the market dropped. We're just excited that it did. And we get crazy when we see double-digit drops. So many of my friends loaded the boat, drained our accounts, but now we're getting the benefit because my accounts are beyond all-time highs, and we're about to hit that 400K mark here. If we just get like another few, like a few points of a percent, and we can maybe be there next week, because I haven't bought any stocks in the last week. Like I've really pulled back. Even though I've gotten some paychecks, I'm more excited to continue to top up my, my mortgage. We did my wife's taxes. She saved a lot more tax than she thought, gave us an extra few thousand to put toward our mortgage. And we're playing this constant game of what do we want to do? Buy stocks or continue to fast track the mortgage, and trying to find a balance of both. And what we're doing here is keeping the mortgage, or basically the value of our property, almost at the same value as our combined stock portfolios. And if the value of the portfolios drop a lot, then we'll focus on that. If the value of the portfolios go beyond what we have in our mortgage value, then we go back to paying the mortgage down more, and just kind of playing this tic-tac back and forth game with it. But I think one of the biggest decisions that I'm kind of like trying to justify with myself is, I am really becoming less focused on dividends and total returns as time has gone on. I don't know if it's going to be a detriment or not, because I've always used dividends as kind of a safety net, as I'm sure many people think it's a safety net, and it's kind of like a delusional way of thinking in the market, because at the end of the day, there's only really a total return value, regardless if you sell shares, keep shares, the company does share buybacks over dividend payouts. At the end of the day, it's just what is the total return? And I want to talk about that a little bit more in depthly, because when I look at my RRSP, this is an account where I made an ungodly amount of money off Tesla. I mean, I introduced this account in 2019. I loaded up on Tesla, and I just got like almost a 250% banger return very quickly in a very short period of time, in which I took all that money and thinking that, oh, I'm going to do the safe, secure thing, the slower return thing. I'm going to put it into SCHD. And I feel like when I look at this 3-year period from roughly, the midst of 2020, 2021 into where we sit today, this is what made me sell SCHD. Because I'm like, even with the dividends, the total return from the time I sold Tesla to holding it has been like dramatically underperforming the S&P 500. I mean, if you look at the S&P 500, I wish I could zoom in a bit because it doesn't look like that line has moved a lot below it. But the S&P 500 has done substantially better from the time that you can clearly see where I bought SCHD, and if I just bought the S&P, like my total returns would have been so substantially better in this account. Now, we have this nice little period where SCHD started to do exceptionally well, but then obviously it kind of gave up a lot of those gains, and I'm kind of getting back to this flatter line experience. And you can see that in like even the 3-year performance. I mean, this is SCHD, the actual returns annualized. And in the last 3 years, we've got about a 5.9%. That in a really inflated couple like last few years, that 5.9% is not a great return. It's probably closer to maybe like 3.5, if we're lucky, maybe 4, depending on like, 'cause we've been sitting at like 3% inflation, right? So you've lost half of that return already to inflation. Just to show you the comparable. And again, 3 years isn't a good time frame. I think you need a bit longer, but it's enough with recent earnings to tell me that I'm not going to get a lot of growth out of this ETF, as far as I can tell, with the recent earnings out of the top holdings, which we've talked about in other videos. Because if you look at the 3-year return annualized on the S&P, it's been 12%. So it's been like over double, right? So even if you take off inflation, you're still closer to probably about 9% annualized, which is quite astonishing in comparison, right? So I feel like I've left over the last 3 years a lot of money on the table that could have obviously been much better toward my financial independence journeys here. And even XEQT is an example. Like if you want global diversity as an example, like in the last 3 years, XEQT has also done about 12.09%. So I mean, even if you bought like one of these more globally diversified ETFs, you've still seen a much higher rate of return than you have out of some of these really resilient dividend ETFs. And I'm not, again, trying to shit on them. I still think they're great and they can have a place in your portfolio. It's one of the reasons that I'm still holding VDY, which a lot of people have been telling me is still debatable on whether this is a better hold or not. But I do like global diversity. I just want to make it a smaller percentage of my portfolio. I live here in Canada, and I still like getting some cash flow to reinvest in periods where the markets are down. And again, even with my total portfolio, I'm still making $500 a month at the scale of my portfolio. But I mean, over the last 3 years, VDY has offered about a 6.5%. So outpacing SCHD by about 0.6% over the last 3 years, which kind of came as a bit of a shock to me because, these things tend to trade pretty closely in line. And for a long time, SCHD was keeping up with the S&P 500, but I don't think that's going to be the case moving forward. I think we just had an exceptional growth period from that 2012 era when SCHD launched to basically 2020. The pandemic, I think, really was a big wake-up call for a lot of companies and put a lot of things into a whirlwind. And now we're kind of seeing the divergence that tech companies, regardless about how you feel about valuations, they are the recession-proof stocks. They are the stocks that have all the capital. I mean, with the exception of Berkshire Hathaway, which has like $350 billion in cash. I mean, you got to really kind of just accept that, like, if you want growth and you're looking for, a certain time horizon in your accounts, you really want to make sure you're allocating, the portfolio correctly to where you're trying to reach your goals. DGRO is my top ETF. Yeah, that might not be the worst one either. I think it's more of a growth ETF, isn't it? Love your content, Kyle, especially the first 2 videos in your members only group, which are now about 5 years old, I believe, an update. You follow up. I don't think the members only group videos, I did those maybe a year or 2 ago. I don't think it was 5 years ago. They're probably more recent than that. And I gave a lot of info on those, but I'll do an update. I feel bad. It's been a while since I've updated some of the course groups, which the links in kylelivingston.com. But yeah, I kind of stray. It's hard to keep up with everything, but I still think there's a lot of knowledge in those courses. Thoughts on MPI? We'll come around to some of this in a moment. One more comment here. Tuning in. Would love your thoughts on acquiring growth stocks for short-term growth, Meta, Google. So we'll talk about short-term because the only stock I'm short-term playing technically is Take-Two Interactive. When it comes to Google and Meta, like we've held onto those stocks for quite some time. And even with tech, I've been in and out of them a bit, but regardless, like between the wife and I, we've always held tech stocks for almost as long as I've been investing. But I don't like them as short-term trades. I think you got to be careful because I don't like to think that, because even Meta trading at a 30 times multiple didn't seem that insane to me. And now it's dropped 30%, which is why I started buying a bit of it. But I'm not trying to like day trade it that much. I'd rather just hold it for the next 3-5 years and presume the growth will continue. Now, if something materially changes, we'd maybe take some profit or something. But I only see Take-Two, and we'll get to that in a moment. But first, I want to talk about Buffett here because we got to, admire, honor the legend himself. The guy that will go down is the most iconic investor of all time. I don't think anybody is going to surpass this gentleman to be a pure-hearted investor, not a guy that starts businesses, who started a company like Google or Tesla or, Bill Gates with Microsoft or Apple with Steve Jobs. This guy purely is just, I look at companies based on what I know about certain industries and sectors I buy. And, this is his thought on tariffs, which I just thought was kind of interesting.
Trade can be an act of war. And I think it's led to bad things. Just the attitudes it's brought out in the United States. I mean, we should be looking to trade with the rest of the world, and we should do what we do best, and they should do what they do best. And I don't think it... That's what we did originally. I mean, we were good at producing tobacco and cotton 250 years ago, and we traded it. And we want a prosperous world with 8 countries with nuclear weapons, including a few that are what I would call quite unstable. I do not think it's a great idea to try and design a world where a few countries say, ha, 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 we've won, and other countries are envious. So,
long story short, Warren, again, in a very humbling manner, which I'll try and crudely define down to don't be a douchebag. Donald Trump, stop being a douche. Because it's not an appropriate way of doing trade. And now we're starting to see the divergence of countries away from the United States, when I get the end game is even trade. And I think even Warren Buffett somewhere in here said that, yeah, obviously like finding even a more fair trade is great. But when you enact a trade war, it is an act of war the way we're going about it, right? And it's causing mass disruption to supply chains, and we don't know what the end results are going to be. And we're only praying to God when you look at the weight of, justification is the detriment that it's going to cause justifying the rate of return of value. And we actually don't know what the outcome is. And Trump's kind of playing with the entire economy. And again, I think there could have been more diligent, methodical ways of doing it rather than just slapping some random, provoked understanding of trade deficits as, the tariffs, retaliatory tariffs in comparison, which isn't the case. I mean, it was just a shit show how they went about it. But nonetheless, I'm not here to debate it because I do believe there's some underlying realities to what Trump's saying. It's like Biden. It's like Biden couldn't get the information out and Trump gets too much shit out. And a lot of it, starts to seem a bit delusional in the sense, but nonetheless, Warren Buffett's going to leave a legend. I think he, he's the history. I mean, we all grow. If you became an investor, the only 2 people that I think could resemble the best form of investing, though, again, I will say that I think what Warren Buffett grew up on, you couldn't accomplish today in the same facets. You couldn't really take the knowledge and what's the Ben Graham book there, The Intelligent Investor, like those really don't apply to the investment world today, in my opinion. But nonetheless, I think when you're getting in the market and you're getting an understanding of everything, I think Jack Bogle and Warren Buffett will still be probably some of the 2 most iconic ever. Well, like they need to make statues erected of these guys at Wall Street next to the bull, right? Like, I don't think it gets more legendary than this. And I mean, it really shows up in the stock price. Like, to be an investor and become $1 trillion company, a top 10 S&P and a globally, one of the largest companies ever is quite an astonishing feat, because it takes something wild. But nonetheless, we'll talk about stocks here. Is everyone forgetting the impossible deficit and debt the U.S. is in? Something, yeah. But again, it comes back to the point: is when you own the printers, does it really matter? They'll just keep raising the debt ceiling. Life goes on so long as the U.S. dollar remains potent. I mean, things aren't that big of a deal. I mean, it really comes down to who's holding the debt. I mean, there's like, I don't like when people sit here and they act like they can just talk about. I don't think there is quite a simple way to simplify like the entire economic machine. It's very complex considering money is pure fugazi. I mean, it is just a printed fallacy of, we all use it as a means of energy transition of, value instead of having to trade an apple for a sheep or something like that. But it is an incredibly complex thing. And it purely operates off like a supply and demand metric, right? So, I mean, that's another fearful thing. What's the US dollar doing these days anyways? Because the way I look at everything is just like, what is the supply and demand? How do people see it? People start moving away from the dollar and you start seeing a detriment regardless of how you feel about global purchasing power. Like this was like one of the most powerful things you have as a US citizen. You're living in a world where the US dollar has more demand than it's seen since the .com bubble, regardless of how much money they've printed, regardless of inflation in the United States. Your global purchasing power has been ungodly if you live in the US. You could take a US dollar and go almost anywhere in the world and be so superior rich, like richer than even like in Canada. Like I think for every dollar you bring to Canada, you have 40 cents more in spending power. Like, how ridiculous that is. So I'm saying, like, if you live in the US and you've only focused on US investments, the best thing you could possibly do is open up a multi-currency trading account, hedge your US dollars by investing in other great businesses that are like in other countries like Mondelez, Hershey's, or like, even in China with Alibaba, get into some yen, get into some, Canadian dollars and buy like the best Canadian companies and just maybe even take 10 or 15% of your portfolio and just do a currency diversification. Because man, like the power you have right now might not last, especially if Trump, changes the rhetoric and people actually start moving away from the US dollar. I mean, you could go back down to a period that's more similar to the 2010, 2015 era, right? Where you're more in line with the Canadian dollar and some of these other currencies. Like I said, there's a lot of complications and all you can do, like you can't sit here and like be like Peter Schiff or these perma bulls that are like trade deficit, like our spending and our debts, we're going to bankrupt one day. Yeah. I mean, eventually that's what's probably going to happen. There's not every country's as smart as like, what is it, Switzerland or Sweden or whatever, that like basically just took everything they had and didn't like dump any of it into printing. I think they were pretty smart about their financial institutions and being like, the safe haven for offshore accounts and shit. I mean, I don't know how you fix it. I'm not that guy. I'm not that guy. You got to tell the U.S. to stop doing useless wars and put it back into the system and paying down the debt and healthcare, but that'll never happen. That'll never happen. Let's be real. So it's just going to be a machine that continues the way it is. The same way Canada and most countries work. So long as there's demand for the currency and people keep moving there. And I mean, maybe I'm wrong. Money printer goes burr. Exactly. I mean, if you have demand and you can keep printing, like I said, if you live in the US, you think inflation's been out of control. Okay, take your money and go somewhere else and see how bad inflation feels. It won't feel bad at all because you're rich. You just don't feel rich in your own country. It's like going to San Francisco and making $400K a year. You might think you're rich, but if you live there, you don't feel that rich, right? But if you could just take that money and make it somewhere where it's more affordable, it's just weird. It's like relativity, man. It's like Einstein shit. It's like complicated. But let's talk about Take Two Interactive here. Because speaking of complications, as one of you mentioned, who sold it, this has been a debate that I've been having, and this is killing me inside because like I bought it in a time period where like the earnings, like when I listen to the CEO and I get the trajectory of the company, I'm like, this is the year. This is the year for Take Two Interactive. And I'm praying to God that I can use the CEO because he's such a very professional, straightforward guy. And he's still talking about multi-year growth. And they've got a lot of games in their pipeline coming out. So if the quarters can remain strong and they can at least meet guidance, I could see the stock trading in a range. But I think if the hype continues to come for GTA 6, the stock could still get some momentum, considering this is one of the few companies in the entire market that is entirely institutionally held. Like, this is something that blows my mind that, like, literally whoever's owning this, it's 99.83% institutionally held. So me and you as retail buying this is insignificant. And when I look at the short interest, it's at 5.1%. The short interest, I can only presume, is institutions trying to protect the massive positioning size they have in this company. So there's some just saying, hey, let's hedge it a bit, right? And I'm really perplexed by why this company trades this way, because I don't know of any major tech companies that have that kind of institutional ownership. Like, just to compare it, Apple, the largest company in the world, right? For the most part, let's just take a look in comparison here. I mean, even Apple sits at 63% institutional. What does Microsoft have? Like I said, it's just such a peculiar stock. Like, I've never been so intrigued by a company for a short-term trade than I have been with Take-Two. Like, even like 74% for Microsoft, right? Like, it's such a perplexing, fundamental for the share float. And again, this company's fundamentals are garbage. Like, if it wasn't for me understanding the future of this company, because past performance doesn't equate to future returns, you have to understand the business and you have to understand where the future is going versus the current value. And I am, again, by leaps and bounds, predicting and speculating that analysts are severely under anticipating the value of GTA 6. Now, the problem is we're getting delays. And now that I have to wait another year, it kind of kills me inside, because I really didn't want to hold this for another year. But, the company's guiding for $5 billion still, so we'll see if they can meet guidance. But when you look at shares outstanding, this company checks none of my boxes. It's diluting us as shareholders. Its earnings per shares are non-existent because the company's been probably reinvesting into like friggin' data centers to even support these games. I mean, their growth, like everything about this, at least gross profit has kind of been whatever. I mean, there's just not a lot going on here to be that excited about. Like, you can't look at this and be like, oh yeah, great company based off the fundamentals and the current market cap. But again, the reason the stock price keeps going up is because people, I imagine, are coming to a very similar conclusion that I have. And ironically, it seems to be institutions, which is even more perplexing, because I feel like this should be more of a retail stock than an institutional stock. But so far, it's been the most tariff-proof, recession-proof stock I've ever bought, with the most garbage fundamentals. It's so weird. It is. I feel like I'm in the twilight zone when it comes to this company, because like the whole market's tanked and Take-Two's at all-time highs. They keep adding more debt every year, though. I'm aware. But again, if GTA 6 does what I think it's going to do, this company can quickly go into like quite a reversal, right? Like, I mean, what's the, let me pull it up and let's just see what the debt currently is. Everything, like I said, everything about their fundamentals are just garbage. But let's just take a look at the base financials right now. What do they got on cash? I mean, yeah, $5 billion to $2 billion. I mean, they're like 50-50 asset to debt ratio. Well, I mean, is it 2024, the first quarter, 5 to 3, sorry. Or sorry, this is revenue. What am I looking at? I'm an idiot. I'm fucking looking at revenue here. Total assets, Jesus, man. Yeah, so we're looking at 15 billion in assets, 6 billion in liabilities. I mean, the debt to asset ratio is pretty strong overall. What do they got in cash? I mean, the cash equivalents are sitting on about 2 billion in cash, or sorry, 776,000 in cash. Am I reading that correctly? 776 million in cash. My God, I really need to get my head on straight here. I'm throwing numbers out just like an absolute moron. It reminds me of a meme that I just saw where this guy starts working at Wall Street and he's like, look at the balance sheet and tell me what the current revenue is. And the guy's like, 3,000. He's like, look at that again. And it's like in the millions. He's like, 3 billion? Oh shit. That's a lot more than I was initially anticipating. But I mean, the company's balance sheet's fine. I'm not worried about the balance sheet. I'm more, like I said, this is a company where I just listen to the CEO, and the CEO, like, he's a respectable guy. He makes a lot of sense, and he keeps promising like multi-year growth, and they're in like one of the new eras of the company, and he's got me hyped up. And I don't know, like I said, I feel like I can't bring myself to sell the stock. I really didn't want to hold it until 2027 or 2026. But here I am being like, oh man, I'm really going to have to sit on this while I look at companies like Google trading at much better values. And oh man, what do you own? Do you own this or do you own Google? Like, it's a hard pick. I'm glad I can own both, but man, like, I guess we're going to be waiting a year, boys. I guess this is one that I'm going to have to put in the backpack and forget about for a little while. The hype of GTA 6 is a damn shame for the delay. I know. TTWO takes a share of internal economy. That alone is a ton of cash for the company. I think it'll make them 3 to 5 billion. I think they're going to do fine when it comes out. Like I said, how do you wait? And if the company gets too expensive in the interim, like, am I going to hold it? Because that's another problem. Like, if I'm valuing it at like, let's say, modestly 60 to 70 billion, I'm able to double my money, and it happens long before the game comes out. Then you're taking on more assumed risk, because it's like you already made the gain. Like, how much more gain, how much more hype. And then typically, if you get to that point, the hype can always be better than you think. A lot of you pointed out, releasing a game that is not ready, has bugs. It's a bad move. It makes players mad. And, you got to respect them for putting effort into something. It is an iconic piece of media. This is a blessing for me. TTWO gives me more time to get in. That is true if you're looking at cost average. Kyle, what actor do you want playing you when you make a movie about you letting us know about TTWO and how it made us all rich? I don't think this is going to be a GameStop-like event. I don't think we're going to see like 1,000x return here unless you're playing options, which I don't have the balls to do. The hilarity of, seeing a movie come out of that. Who do I look like? Kevin Bacon, maybe. I'm probably more. Does Kevin Bacon look like me? I don't know. Who looks like me as an actor? That just came to my mind. Kevin Bacon might be able to pull me. I don't know. That's so dumb. Anyways, I want to move on to some more entertaining topics here in a moment, but Rockstar Games will not release an unfinished game 100%. Will you be adding more XQT? The more I look into the ETF, the more I like it. It's a one-stop shop. The problem is I'm more growth-oriented. Like I said, if you're not focused on the market, my entire job is the market. If you're not focused on the market and you just want really reliable returns in case the US falters and you want like self-weighting returns, you can look at VT, you can look at XEQT, like they're all great companies, or ETFs, I should say. And you can just go to your job, cost average them and turn the market off. But I'm a guy, like I said, that's trying to outperform the market. So, when people are shitting their pants in the market tanks, I'm emotionally not going to get dumb about it. I'm going to start buying aggressively. And same with stocks, right? Like I'm not going to over leverage into individual stocks, but if I see an opportunity that makes sense to me, like I would rather be paying attention and get into it. So I want to get XEQT as one of those, like, it's basically what I'm going to call those kind of, when I get to the scale where I want to be and I meet my like financial independence goals, which, I'm not that far away from, then I'm going to start reallocating a lot more of my capital to XEQT, because then it's more about wealth preservation than it is about growth. And again, I'm not a guy that's looking to make like 10 or $20 million. Like if my business continues to do well, I don't know where I'm going to be at in the future. But right now, I think most of us that are on this channel are more or less looking to get to that place of like what I guess you call FU money, which for the most part, I'm sure many of you are partway there anyways. I mean, just to have even a couple $100K in the bank pretty much gets you there. But I'm a guy that wants to have my mortgage paid off and like enough to float our cost of living by the time I'm 35. Which is, I'm not even 33 yet, but I'm getting close. My birthday's this month. But I don't think it's an unreasonable goal, because again, if you can get like, paid off mortgage and say 700,000 to $1 million in the bank, if you can average 5 to 10% off that a year, I mean, if I ever had to pull against my portfolio, like that's all I would ever need, right? But again, that's not like the end game. Like I want to, be creative and move beyond this. It's just, this is what this channel is. And I set this journey out like basically when I was like 23. And I like always had it in the back of my mind that like, if I just do these things in 10 to 15 years, I should be financially free. And it proved to be real. Like, I mean, I've been in this now since I've been 23, 10 years, like a decade coming, and here we are. So, I mean, it's definitely the horizon's there. Like the finish line is definitely on the horizon. Kyle going to get 600K and become a single stock portfolio retirement. Like, so again, like I have my wife too. So keep that in mind. Like, I'm not doing this just on my own. Like, I'm very fortunate that like, my wife actually has a job and we have 2 household incomes, and she's also like putting money toward the mortgage. And she also has a TFSA and RSP, and she invests her money. Like, that makes a dramatic difference to have a life partner that has very similar mindsets. Cause whew, baby, I would be okay on my own, but if I had to do it on my own, I wouldn't be living in Toronto. Like the only way I made Toronto work was by having a wife. Like, I would be far, far more behind this dream if I was trying to live in Toronto on my own with the money that I had. Quit job, money easy. Yeah, I don't want to quit my job per se. I like the job that I have for now, but again, I don't know where I'm going to be at. Like, I just want to be comfortable in the mind of not being forced to do what I've lived in. I don't want to call living in poverty. I definitely wasn't like poverty-ish, but I've never been like, middle to upper class. Like my parents, it took their lifetime to get to like where they are, and they've done incredibly well working hard. But we live in an economy now where working hard doesn't pay off. Like you have to be incredibly intelligent. And I think that kind of leads into this question here, which was a huge debate that I've had with a lot of people recently about like what the state of the economy is. And this guy says, in my mid 30s, I have nephews ranging from early, late 20s. I think the majority at that range will be screwed unless they get family help. I don't have kids within the next 5 years or so. Or says, if I don't have kids within the next 5 years or so, I'm going to try and help them out in a significant way. I have been planning for an early retirement myself, and I am on track. But if push comes to shove, I will sacrifice my existence and work until I drop dead if it means I can lift some family members out of a perpetual state of hopelessness. I'm not even old, but I truly feel sorry for the younger generation. The deck is stacked against them. So even with my dad, my uncle's family, like one of the biggest arguments is like they came from immigration and like they had a hard life. There's no doubt about it. Like I watched my parents as farmers, like work their asses off, build everything with their hands and build a successful life. The reality, though, is like if you are 20 and you do not have parental support, you could never, ever do what my parents did. Like I couldn't buy the farm that my parents bought it. And they bought it like, I'm pretty sure it was like condemned at the time. And it was a 60-acre farm. That farm is worth like millions. Like now when they retired, like they got like it became like, you know, all properties become worth more than $1 million. Like you just couldn't, my dad, uneducated, you know, working in factories did that. Like you couldn't do that today, right? Like that's the harsh reality. And a lot of these older generations think, oh, you're just not working hard enough, or you're lazy, or you're too thinking like you deserve a house, you deserve a Porsche or these nice cars. But like, I don't think that's the reality, because the younger people I talk to that don't have that family support, they're drained and they don't want to live here. They just don't. And that's the harsh reality, right? Like, I mean, the guy that came and installed our internet came from India, and he's like, I'm going to go back to India. India is way nicer than Canada is. Heck, the people that help deal with the maintenance or the amenities in my condo, like there's this girl that I talked to that's 20 years old or 21, I think. And she's been here since she's been 19. And she thought she could come here. She's getting a business degree, and she thought she could just get a job and afford to live here. She's like, I'm living in a tiny closet and I'm working like 2 jobs. And she's like, I have no time for myself at all. And she's like, I don't know where the end of the line is for this because shit's so goddamn expensive, right? And I don't know how you can have an economy where there is no ever getting ahead. Like regardless of how hard you work, there's no physical labor. There is no just basic work you're going to do without being incredibly intelligently diligent that will get your footing into a proper living where you can have a kid, a sustainable life. It's not like the 1960s, right? Where you could, one person worked and you could afford a car and a house and the wife stayed home with the kids. Like now we move to an economy where it's like your wife has to work and you have to work. And now we're getting to a point where like, if you really want to get ahead, you both have to be working multiple jobs, right? Like I have a side hustle. My wife has some side hustles. She works her job. I work my job. And we were lucky enough to be in a perpetually up market. Like we were smart enough in our early 20s, which was a way different market because that was just after the financial crisis, to be investing. Like I didn't have a lot of money. I was a broke kid most of my life, making 40 grand a year living with my parents. But I was able to take the little bit of money I had after taxes and expenses and put it into the market. And I had a decade of up. Like, so, you know, I'm not complaining. Like I got a big benefit from just letting my parents, letting me live with them and being able to invest. Like that changed my life. But like, it could have been so different if you're forced to live on your own right now. And like I said, if I was, you know, in my 20s today, the only thing I could think to do is go get in a trade and go to Alberta or go somewhere like the cost of living isn't so substantially high. I would live with a bunch of friends, or at least live with people and just rent a room and then try and bank 50% of my income for 3 years. And then you're going to probably, if you're lucky, save up 50 to 100 grand and try and use that money to start your life. Like get a down payment for a property there, maybe start with like a 200K condo or somewhere between maybe 300-400K. You could maybe get a small house and just start your life. That's probably what I do. And I don't think it's unreasonable. And I'm hoping I'm not speaking out of my ass. I would go to Florida. Yeah, a lot of people are. Everybody I know is moving. Like anybody I know that has 2 cents in their head are moving. Everybody else is kind of stuck here, and all they do is whine and complain about the government's not doing enough. And I'm not a person that believes you should rely on the government for your financial future. And it's not the government's job to control housing, but the government does, I think, have a responsibility to say, hey, like, this is unsustainable. Like we can't have this happening, and we have to find a way to adjust. It's kind of like San Francisco. It reminds me of, what's it called? Not the Pasudia. What's the, where all the houseboats are, and everybody that like can't afford like a multi-million-dollar normal little house or a condo, they're all moving on those boat houses. I mean, that's kind of the reality we're kind of heading toward, right? Downtown Toronto condos are tanking nowadays. I mean, that's another reality that's nice. Like, I mean, yeah, maybe we should talk a little bit about that as well, because, you know, somebody asked me, you need to start looking a sec here. I want to bring this up real quick. Somebody asked me, what are your thoughts on the Toronto condo market right now? There seems to be some great deals. So I think I might have bought a little bit too early, but I'm not somebody that basically I'm not somebody that looked at the housing market. I don't care if it crashes or if it continues to go up. I'm just somebody that believes if you're buying a home, not an investment property, you're just buying a house or a condo for living in, not an investment to live in, you need to look at what is affordable for you. Meaning, in my opinion, no more than 30% of your take home pay after taxes should be allocated to just the mortgage. No more than 30%, because that way you have enough to live, invest, travel, do what you need to do, live a good life. A lot of people buy these things and they're like 60 to 80% of their entire net take home is going toward housing expenses, which is way too nutty. You got to be real careful with that because you lose your job and you're going to be in a real shitty, situation. But when we look at like the real estate market right now, it like Toronto is having like arguably one of the biggest corrections. It's not huge, but overall in like Ontario, we've seen about a 3.2% correction in housing. And that is the responsibility, I think, of luxury housing coming down a lot. We've seen a massive correction in luxury housing. And that has probably had a lot to do with interest rates, but we've also seen this weird thing happen where, I think there's like I asked ChatGPT or sorry, Gemini, and it says Toronto condo inventory is currently high, with several sources reporting significant increase in listings. The market is described as being a buyer's territory due to an oversupply of available units. This has led to a decline in prices, with some sources indicating a decrease of up to 10% in the average asking price per square footage. This is incredible. So I think if you're looking to live in the city, you want that kind of lifestyle, and you have the affordability to do it, go for it, man. I mean, like I said, we bought our place and it was probably more in the range of like I think in full transparency, we bought ours for $696. I think after the fact, I think all said and done, we were like $696 in, and we got like a really decent, I think it's like 1,300 square feet for our condo, 2 bed, 2 bath. And now you're starting to see some pretty good deals come up, right? I mean, like we're not right downtown, mind you. We're more like on the border of like Markham and Scarborough area. But I mean, like I've been scrolling through all these different condos today, and I was like, damn, like, presuming they're not like severely underlisting them, which I imagine they're not, you could probably negotiate, right? And that was the only thing we thought too. Like we didn't have to get into a bidding war, and we had like the first property we found we liked, we got. Like, I mean, that's rare for the last like 5-6 years of the Canadian housing market. Like you've always had to look at multiple properties, put multiple offers in all over the place before you got lucky. But, I'm looking here and these aren't unreasonable. Keep in mind, they tend to list them a bit lower than they're probably going to want to sell them for. But, for certain areas of Toronto, just pay $700K, 2 bed, 2 bath, 800 square feet might not be the worst thing for you, especially if you have a partner. So if you want to live in Toronto, I mean, now is probably the opportune time, because I can only presume that these opportunities are rare. Not only have interest rates come down pretty materially, so at least you're getting a better rate, but I mean, you're also looking at one of the most desired cities on the planet. And for to be one of the most desired cities where there's not a lot of demand right now, take advantage, because 5-10 years from now, we could be back into a buyer's market or a seller's market. And eventually we end up being like New York, where you're just going to have to pay an ungodly amount. But again, I'm not buying these properties because I expect the property value to go up. Again, I just wanted affordable, sustainable living near my family and friends. And if you can make that work, all the better to you. The condo fees might be higher though. Yeah. So this is like the reality of it though. This is my thinking behind it. The more expensive the condo you buy, typically like that's where the condo fees and everything kind of, especially property taxes, are based off the value of the property. But here's like the debate that we had. We bought an older building that's like 30 years old, 35 years old. And our condo maintenance fees are like $950 a month, but that's all inclusive. It's hydro, it's water, it's the security, it's all the amenities, which we have a lot, very luckily, very fortunate. But the reality is in my opinion, is that because we bought an older building, we didn't have to, for the same square footage. I looked at properties around closer to the downtown core, and you'd be paying about 1.4 to 1.5 million. And I said, even if our HOA goes up 2% a year, like there's just no way that like for the under 7 that we paid, we would have had to spend like an extra 600,000 to 800,000 for the same square footage anywhere closer to the downtown core. So I'm like, even if we live here for 30 or 40 years, our condo fees will never come close to the amount of money that we're saving on the value of this building, regardless. And again, I'm not buying this for an appreciating asset. I just looked at it as saying, hey, if we pay the mortgage off, our total cost to float the place is going to be about 14,000, maybe 14,600. So I'm like, if the entire mortgage is paid off I mean, 14,600 to float this every year is not that much comparably. Like, you might think a house is cheaper and you're not paying HOA on a house, but you do have to take into consideration, like, you have to do so much maintenance. Like, you're gonna have to worry about the roof. Eventually your heating is gonna go out. Eventually all this stuff is gonna happen. And I've seen it happen with my parents. I've seen it happen with my in-laws, like, where all of a sudden you need to do a major repair and now you're spending, 5 to 10 grand on a heating unit or whatever. And all of a sudden you think, oh, I wasn't paying $900 a month in HOA to have this house. But then when you add up a $5,000 roofing repair or whatever, then all of a sudden you divide that out over the time you've been living there. And you start realizing, when you have to deal with garbage and all this stuff, like, the trade-off actually isn't materially that difference in cost. Me and my mom have had this debate a lot because I hate when people are like, oh, condos are more expensive than a house with HOA and all this stuff. And I'm like, when you run the math, is it though? I mean, is it? And it depends too on, like, what's your property taxes and how much is the house, because typically houses are a lot more than condos are. You can take a lot of different math into play here, right? I mean, it's complicated. I do think it's worth investing in something like Allied Properties with an 11% yield by sitting. Okay, I'm going to tell you something right now. I have been horribly scared away from the real estate investment trust in Canada. Somebody put something into perspective for me, and I've seen some news articles, and there's been a horrifying reality that REITs haven't really gone up in value, but the entire real estate market has exploded. And you have to ask yourself why that happened. And I think of all the REITs out there, RioCan is arguably one of the best maintained, but you still have to ask yourself, why haven't they gone up in value? And there are some perplexing realities behind that I'm sure if you dig into, when you see management compensation, some corruption that goes on. I mean, there's a lot of corruption in the Canadian real estate market. I think one of the most intriguing things that I've heard and seen is that, like, you remember during, like, the pandemic when all these condo developers were going bankrupt, which didn't make any sense because they don't take out loans to construct buildings. They get deposits from people like you and me. And, I've heard stories of these developers that come in and they basically say, oh, give me this loan, there's $60,000, $100,000 deposit for 5 years. And then you get onto the fourth year and they're like, oh, pandemic, inflation, we're going bankrupt, even though the building's almost built. And they say, okay, we can't do this. We're going to refund you the money. So they refund you the money. So they got an interest-free loan to build the building. They refund you the money, and then they probably take it out on a loan and then immediately turn that building into a rental unit. I don't know. There's a lot of flaky shit that goes on in the Canadian real estate market that is, like, hyper perplexing, especially with, like, when you look at compensation some of these managers get. I would just be very careful. I was always really into Canadian real estate investment trusts, but, like, outside of Canadian apartment properties and maybe like RioCan, like, I don't know, there's a lot of mismanagement that goes on considering how well the real estate market is done. Like, you would have been always better off buying a piece of real estate than owning these REITs over the last 10 years, which is a really weird thing to consider. It really does show that there's been some stuff going on. You said you'd keep the Meta and Google stock as long-term holds. Is there any cash out strategies to them? Not really. What I want to end up doing is I'm trying to use them to fast track my financial independence. So I'm looking at them for about 3 to 5 years out from now. I'm presuming they keep on good growth. They're trading at great values today. I think they can justify their values, and I think they're just great companies for the next 5 or 10 years. My goal is to hopefully they scale up to being too big of positions for our portfolios, and I'll trim them by like half or more, and I'll take that money and I'll put it into something like XEQT and continue to look at wealth preservation, perhaps over being more of aggressive growth strategy. Would be my thinking behind it. But yeah, I mean, there's no exit unless something materially changes in the fundamentals. Like Apple is an example. Like, we own a bit of Apple, the wife does, but it's a pretty small position. But I'd have a hard time stomaching a large Apple position here because it is such an expensive company. Scarborough's prime. Yeah, it depends on where though, right? Like, I mean, I can show you expensive areas of Scarborough. We're like right on that border, but yeah, Scarborough, there's some good areas, but I don't know. You got to be careful. There's some ghetto areas too. I wouldn't want to, like, if you drive from where we live, like I can drive like 15 or 20 minutes and be some pretty ghetto areas. Like, we're pretty close to Markham. So we're like in Asianville, and the Asians are very nice. They're very respectful. I love the food in this area. You get everything from like Vietnamese to like the Middle East to like, I mean, the amount of restaurants that we found, like, oh man, I love this area we live in. Markham is really expensive, but if you just move just slightly in certain areas, like if you move more toward the Stouffville area, like like the like Markham Stouffville, like you can get some more reasonably priced properties. Same if you just cross the border into Scarborough on the other side of the 407. You don't want to move toward Richmond Hill. I feel like it's a little bit too dense. I don't like that other side of the 404. If you cross the 404 like west into that area, like that's just, it gets way too expensive. It's way too populated. The 40 or the Highway 7 there just gets so jammed up in rush hour. But yeah, I mean, there's a lot of pocketed areas that are a lot cheaper. They're really nice still, and you're not in the ghetto because there's some ghetto areas. Like, I mean, you don't have to go too far, in certain areas to find some pretty ghetto-y areas. I'm happy finishing paying off my house in June. There are only 2 payments left. Oh my God, congratulations, dude. What a feeling. My mom said that one of the greatest feelings she ever had was paying her mortgage. My parents paid their farm off when they were 33. My mom said, we're going to pay the mortgage off before we have kids. And we're kind of in the same thought process. Like my wife and I were like, we're not even 33 yet. And we're like, hey, like, we've almost set ourselves up. Not that we're going to have kids, but, it's a thought. It's like, we could easily afford it. That might be something that keeps me working. Cause like, instead of like, being like, oh, financially free, I'm going to go live on a boat or just travel. Like, obviously I still want to travel, but if we want to have a kid or something, it's like, hey, I could keep working or even part-time work and focus on the kid and actually afford to spend time with the kid instead of us having to like kill ourselves. Right. And, we'd be able to give that kid a decent life and, have that enjoyment as well. Fingers crossed you get a good kid at least. I mean, those guarantees. I pray that you, Ryan, the independent investor, Mariage and Penny Queen, research Ucore, rare earth processing, and graphene manufacturing group, Canadian exchange companies. Yeah. I think one of the stocks that we're playing around with right now is Oroco Resources. They're a pretty intriguing copper play. They want to set themselves up to be a buyout potential. I think that company's sitting on like 25 to $30 billion worth of like copper value. It's kind of insane. Now they have the Mexican government on their side. Maybe I'll probably do some sponsored videos on that at some point here soon. I have some investments in YieldMax, coin a very high yield. Any opinion on that? So I'll finish up with this. I mean, you guys have so many great questions. Do you have Blossom account? I got to get a Blossom account. I do have it. I don't share my my stuff on it, but I do have a Blossom account. The tariffs are going to ruin Apple soon, maybe. But still, nonetheless, I keep bringing these up, and I will just say, like, let me just pull it up because I know some people have been pointing out there's been some pretty high returns out of these option ETFs, and they have been quite extraordinary, but they've been very short term. And I will say I do not like option ETFs. I think for the most part they are very sketchy investments that tend to underperform the market. And the only way you should hold them is if they've been around long enough and they, you're an income oriented investor. Because if you're not an income oriented investor and you don't need the dividends today, most of these ETFs are a bit insane to hold. Because I mean, this thing has a distribution rate of 111%, which is nuts. But let's just take a look here because the rate of return is insane. Since inception, this thing has yielded 82%. But you got to ask yourself why, right? Like, this ETF has hardly been around, and it's clearly, it's maximizing off coin, which, is basically a Bitcoin thing, right? So I don't know, you really think this is going to be sustainable? That's like the question you got to ask yourself. Like, over long periods of time, if you could get an 80% return a year, buddy, I would be a billionaire within the next decade. Like all of us would be. So like you've already got to kind of put a red flag up. Because all the YieldMax, a lot of the ETFs that have had like 3 to 5 year performance, none of them I don't know one that has outpaced the S&P 500. They typically, you can get some good returns. Like I've seen some that can get you 8 to 12%. And there's nothing wrong with that. Like if you're an income oriented investor, I don't have anything against these ETFs. The only problem I see is there's a lot of young investors that listen to dividend investors and they're like, oh my God, I could put $100,000. If I just get $100,000, I could make a 15 to 20% yield and I would be making half my wage. Like, I'd be making 20, 25 grand a year. And it's it's a dilutive way of thinking because it eats like you lose so much capital because a lot of time they're just paying out the stock price because, when you get in certain market environments, options just don't work that well. And the total returns end up getting eaten away down to a more like relative return of closer to like 5 or 6% for the most part. So just be aware of that and just be careful with what you're doing. There's nothing wrong with making them a small percentage of your portfolio. Just be cognizant of the risks. Contribute to the earth. Yeah, I know, right? That's another reality of the market environment we're in, though. I mean, it's a sketchy, economic reality we're in where, like I said, we can't live in an economy where, a normal person can't get a job and can't afford to live. And I'll give Trump some credit because I think he is aware of that reality. And I hope he's not just being a delusional nutbag when he's just saying like, oh, we're going to make it so if you make less than whatever, you're not going to have to pay tax. And, I don't know if that's a good or a bad thing. I don't know if he's just saying it to keep the broke people that are like stuck dealing with this tariff war, that are like, running small businesses on board with like what he's doing. But I don't know if I'm for or against it. I don't care if you need to pay taxes. I'm not against taxes by any metric. I just don't think we should be in a capitalistic society where we focus on profits over human need. I think there was an experiment, wasn't there, where this guy that was running a business was making millions and he's like, I don't need any more money. I'm loaded. And then he decided to give up like more than half of his paycheck and just give his employees a decent wage. And then within like 5 years, all of his employees were buying homes. They were having kids. It's just like, you can't have a functioning economy where there is no middle class. And we're losing the middle class. Like I said, you can look up the statistics, but the middle class in Canada right now, to be middle class is to be millionaires. That is the reality of the middle class in Canada. It's fucking weird. It is like, you get so excited because like my wife and I are millionaires and we're like, oh my God, like we made it. But we're like, technically every middle class person in Canada right now is technically like almost a millionaire, or they're worth like hundreds of thousands of dollars. So, I mean, like, it's a perplexing reality to be facing for sure. But nonetheless, I have rambled long enough here, folks. I appreciate y'all stopping in. We're living in some really interesting times for sure. So I hope you guys are all doing what you got to do to get ahead here. And I hope you're investing, living your best, life, and, living frugal like the rest of us do. Because, for us to be millionaires, I'm not driving a new car. I don't got my Mercedes or my Tesla down there. I got my nice little 2016 Hyundai accent hatchback. I love listening to Dave Ramsey because he's always like, oh, the rich people, it's far and few in between where you see somebody that actually looks rich is rich. Because I'm like, the way my wife and I, when I'm starting to look at my accounts, like, I'm starting to feel a lot more relaxed than I have been, a decade ago. Like, I don't feel like I need to grind myself into the toilet like I used to. But man, if you saw me out in the wild, like, to put it in perspective, I'm wearing pajamas. And it isn't so often in the wild you'd catch me wearing my pajamas, driving my 2016 Hyundai hatchback without my suit jacket on, like the same suit jacket I've had for the last like several years. Do keep in mind, I do have a nicer suit than this, but this is my passive income investor suit. So I like, I'm living that frugal life for sure. Trump is absolutely cynical and delusional. He will say anything. Only half of U.S. citizens know it, which is horrific. I don't know. Like I said, I don't like getting too political, but, got to be careful. Views on Pepsi. Pepsi's very expensive today. Google is way cheaper than Pepsi, and so is Meta. This comes back to my whole SCHD talk that consumer staples have actually gotten quite more expensive than some of the tech companies have, which is a weird world to be living in. But on that note, stay cool, stay awesome, folks. And as always, I look forward to catching you in the next one.